Yeah, what's up, everyone? Good day. Welcome to another new week. Today being the 22nd of August, 2023, we will be looking at our weekly market outlook. And to begin, we'll just quickly take a rundown of just look at the expected news, the red news, basically when we'll have them, so that we just at least have them in our heads. Today is Monday, and there is no high impact news on major pair except for the Chinese yuan one. So Tuesday is also relatively quiet, and then on Wednesday we have lots of red news from the euro, from UK, and also from the US. So we have news, high impact news relating to the euro, the pound, and the dollar. So you keep those in mind. You could see their time, the time when those news will be released. So you basically, probably stay away from the market, or manage your profit, your trades as they move. Okay. And then on Thursday we have 1:30 p.m. unemployment claim from the US. That's the USD. And then on Friday, we also have the some high impact news from the euro, the USD, and some other pairs. Okay, so that's basically the breakdown of the expected fundamentals for the week. So we'll keep that in mind, especially on those times when we're having those news, to maybe avoid getting into positions so we don't get wicked out by the liquidity in the market. So we jump over straight to our charts, and we have quite a number of we'll look at quite a number of pairs from the I'll give you an overview, an overall outlook on some pairs. So we'll start with the dollar. Actually, let's go to the DXY. Okay, so let's do this like this. Let's go to the DXY and look at the overall structure of the DXY, so you can see. So we'll know exactly where we are now. Like I mentioned, I think I mentioned in last week's class, the market has been bullish, very bullish, right? In this move, right? And then we broke bearish here. So this is the first time we broke. So we had, so let me zoom in a little bit here. Okay, so we understand that we were bullish all the way up here. So I want to zoom in so we can see it better. And then, so this was the last down move, right? I made this push up here. And then basically all of this, right? All of this, we're still expecting bullishness, right? It's still bullish. And then when we broke down here, this doesn't necessarily mean we're bearish, but this is the first sign. We broke down, and then we broke down again. So we broke down twice. We broke down a third time, a fourth time, right? And even this is still bearish. So we've still, like, this is still, so far we've not made a bullish leg. We've not pushed higher. We made a new low here, as you can see. And then we made a, and that low came from, this low here came from this high here, okay? So so essentially we are, the DXY, or the dollar index, is bearish, right? And you can see I highlighted this zone as the last up move before the down move, an area where we could see potential dollar weakness, okay? And then as you can see, the market is reacting to that. Now this doesn't necessarily mean that we're going to see the dollar plummet, right? Because zones hold and the zones break. However, we have to respect the direction price has been in, which is bearish, right? So on the higher time frame, we'll see that the market is bearish. Now, obviously, on the lower time frame, on the 4 hour, on the 1 hour, see that the market has been very bullish. The dollar has been very strong. So things like EURUSD has been quite bearish in the past in the 1 hour chart. GBPUSD has been bearish in the 1 hour chart. Gold has been bearish in the 1 hour chart. USD, EURUSDJPY has been bullish. EUROCAD has been bullish on the 1 hour chart, mind you. But the overall structure, the daily chart, the market are all, so for example, all the XXX USD pairs have all been very bullish, right? But the lower time frame has been showing bearishness for the past couple of weeks. Now we have approached a higher time frame zone where the market needs to decide on what it wants to do next, of which, if we follow the overall structure, which is price wants to continue, price likes to follow the path of least resistance, then would expect the markets to continue to drop down. That means probably begin to expect for that weakness for price to then come back down and take out this low. Now, whether that will happen, we'll see about that. So that's our outlook. We're looking at the dollar for this week to probably lose some of the strength that it has been, gathering for the past couple of weeks. So we use that in mind, and we go over to EURUSD. So you see what I was mentioning here. You see that. So the DXY is basically, it's inversely proportional to the XXX USD pairs. So you know, where the DXY is bearish, right? Where the DXY is bearish, XXS USD pairs would be looking bullish. Okay. Now, so you see this here, where this market has been bearish, just as DXY has been bullish, and then shifted, you know, bearish. Euro USD was bearish all through last year, and then shifted bullish toward the end, and then continued to maintain that bullishness. So we're looking at this market, and the market is clearly very bullish. Now, if we look at the last couple of moves that the price has made, you'd see that, okay, let me zoom out a little. So you'd see that, you know, we have price came from this high to this low, to this high, to this low, to this high, to this low, and now this high. So, and where did this move here that caused this break out of this previous structure, where did it come from? It came from here, right? So if this market wants to maintain the bullishness, we should see price hold. That's the idea, and then probably come back to this top. Now, it doesn't mean that we're not going to, you know, just because you know direction doesn't mean you make profit from it, right? Just because you know that the price is bullish doesn't mean, you know, you make profit from buying anywhere. So for instance, you know, from when price made this low to this high, and then made this low to this high, this market is still bullish. If you bought here without a stop loss, you probably would have blown your account, right? Because, well, yes, true, the market came back here, right? But you see how far it dropped. So you want, this is where your own personal trading plan comes into play, how you get involved, how you manage your trade. So you take losses, sure, definitely. Maybe you might have been looking for price, you know, when it tapped into here and you got some confirmation, and maybe you traded off some lower time frame structure here, which you ended up making a loss on or break even, and then maybe you decide you now get involved in a trade that began to move. And remember, you would manage your trade accordingly. So you may not necessarily, even if you get involved in a trade here, doesn't necessarily mean that you're going to get, you know, hold on to the trade till this point, because you could get in point in the trade, stop loss, you know, take profits, you get out of that trade, you get involved in another trade, stop loss, take profits, you know, but you're looking for buys because of the context of the markets. And then, you know, when you're trading in the direction of order flow, you're going to have it, basically, you're going to have a much better time with the trading. So similarly, we are at this low, which we expect to hold. And if it does, we can expect, you know, for the next couple of weeks, price to try to find its way back up here. But first of all, we need to see this place hold, and we need to confirm that this place will hold, because, you know, if you go back a little bit here, right, this market has been, or was very, very bearish, making lower lows, lower highs, 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 lower lows. So, you know, just because the market has been delivering bearish for quite some time doesn't mean it can't shift bullish. So somebody who is looking at this and say, oh, it has to go down, what happens? The market blew past and continued to go up. So if you decide to, you know, to sell, basically, to sell from here, and you're trying to go after here, and you decide you don't want to use the stop loss, well, by now you should be out of trading. You'd have blown the account. But if you, let's say a price gets here, now you might have even confirmed here and get involved in the trade. This is why you manage your trade, because let's say, remember, let me do this. Remember, at this point, for instance, where is my replay to? Is it not working? Okay, let me just do this since that doesn't want to work. Now, remember, the context of this market was bearish, right? Bearish, right? Now, let's say at this point where we're looking at this bearish market, price made this. Okay, it's working now. Okay, so let's say at this point, price makes this, you know, price made this last move here from this high to this low, and we're in a bearish market, and we are trend traders, so we trade in the direction of the market. And as price is pushing up, you identify, oh, I'm going to look to sell from here. or I'll look to sell from this high here, right? So let me do this. Let me draw this instead. So you'll have identified looking for sales from here, right? Right, so you'd have identified looking for sales from here, and then price gets into, let's go like this. So price makes its move, taps into that zone, right? So price gets here, taps into the zone. Now this is a daily chart. Now on a smaller time frame, you might have, you'd have probably confirmed structural shift or Wyckoff basically distribution here, and you might have used that to get involved in a sell, of which you are correct to do so, because well, the market has been showing bearishness, and you find a confirmation to trade, and you let's say you trade like this, and you go after 1:2, or I don't know however it is you get involved in the trade. Now, okay, so let's say something like this. Now, obviously, your overall targets. The overall target is down here, but you definitely want to manage your trade, because you know that price does not always move in a straight line, right? So we could have this, which is what was expected, but we could also have this, or we could have this, where price doesn't even respect it at all. However, the important thing is we confirm that area. So we have an area we're interested in, then we look for confirmation that price really wants to, because before you want to start selling, you want to see that there's selling pressure there, right? So confirmation can be anything from candlestick formations to Wyckoff accumulation of distribution semantics, or counter trend line or trend line breaks, right? So on a smaller time frame, you could be looking at something like this, where there's a counter trend line on the a trend line. Remember, the overall structure is bearish, but then there's a trend, a counter trend, which is bullish, and then you're waiting for that counter trend line to shift, to break, and then you use that as a reason to sell. But you're confirming the entry. It doesn't matter how you confirm it, but you want to confirm the entry and then execute the trade based on your risk parameters, or based on your RR and your defined trading plan. In which case, you will not be wrong for looking to take this trade. But as we can see, at this point, maybe you should have taken profit, at least partial profit, move your stop loss to break even, and there's no risk on the trade. And then what happens is price doesn't respect this area. Instead, it makes a higher. Let me go back a little. Can I go back? So at this, basically that trade did not go as planned, or definitely you should. This is a daily chart, so you should have made profits on this one at least. Okay, but let's say you didn't. Now again, price pulls back up, right? So price pushes itself back up. In the context of the overall structure of the market is still bearish, because this is the high that is supposed to be protected, and this is supposed to be the target. Now, just because this is the high that is supposed to be protected, and you decide, I'm just going to place a pending order, because maybe you've identified a zone here without confirming the area, and say, once price taps in there, I want to sell, I'll put my stop loss. If you're using stop loss, good for you. If you're not, then, well, you see the problem. Where you're like, okay, our target's here, and then would look to go after this. And what happened in this particular instance? Well, let's see what price did. Price made a, okay, and then price pushes away from it. There's no confirmation to sell here. There's no confirmation whatsoever. I said maybe in here, if you take a trade based on your system and you make a loss, it is perfectly fine, right? So you see that, you confirm now price that basically the market has broken that bearish structure. At least this doesn't necessarily mean that we're overall bearish or overall bullish now, although that's a different lecture entirely. But then you're seeing that we've shifted bullish, at least for now. We've shifted bullish once, right? So the question is, what does price now do? So the times like this are the time you probably stay away from the market and just maybe look at another trade, another pair, or wait for a better setup. Okay, and then price continues to move, right? And let's see what happens. Price makes a, remember it broke down once, it broke up once, and then look at this, price has broken up again. So first of all, we had the first break of structure here, and then we have another break of structure. So at this point, we have to start at least respecting the fact, understanding the fact that price is now appearing to post higher highs and higher lows, higher highs and higher lows. And we can now begin to look for bullish setup on the on this market and look for confirmations of those setups on, let's say, the lower time frame. Okay, so clear all joints, and if price continues to move, we'll see that structure. But now let's go back to live price. Okay, so the same idea here. No, I don't want to do it again. Okay, so the same idea here. We are at an area. We'll look for confirmation of that zone, and then we look to get involved in the trade. So let's look at what confirmation of that zone might look like, at least for this particular price structure. Now you're seeing that, okay, from that high, which is here, you can see this is that high, and then price has been in this kind of bearish structure, at least on this 1 hour time frame, coming into this zone. So what I would like to see to begin to look for buying opportunity is for markets to begin to shift bullish, at least on this time frame. So you can see low high to low, lower high to lower low, to lower high, to lower low, to lower high, right? And then this is where we broke down to lower low, right? And then we broke, let me see, we broke here. So that'll probably be the lower low, right? And then a lower high, and a lower low, and then a higher high, and a lower low, and then a lower high. And this is still a higher low because the market did not necessarily close below it, and I was making a new higher high. So you can see that the market, has shifted multiple times. So it shifted, it was bearish, right? Shifted bullish, went back bearish again, then shifted bullish again. So it went from bearish here, shifted bullish, and then went back bearish again, and then shifted bullish. So depending on which of these highs are you looking at, if you're looking at it from this point, because it depends on where this low actually is. I think it's down. Okay, so at this point, market has shifted bullish like this again. So what I would like to see, right, personally, what I'd like to see to be more interested in looking for buys on this is for price to shift bullish again. I would really like to see price take out this high, right? So just to be safe, I'd like to see price take out this high, right? Now, if price does something like this, where it takes out this high, at least closes above it, like so, then I would begin to look for if price, let's say, pulls back down, I'll then begin to look for buying opportunity to take this up. So on EURUSD, currently I like what price is doing, right? Breaking structure. If it breaks this high, I will begin to look for, confirmation to either follow the trend or wait for it to pull back to zones I'm interested in, and then look for those buys. Now, the reason I spent quite some time explaining EURUSD is because the same explanation goes for GBPUSD, right? The same explanation goes for gold, right? So this GBPUSD, if I go up to the daily time frame here, you'll see we have the same style application, bullish market, right? Pulling back down to an area of interest. We have our liquidity target up here, and then we want to confirm that price is really interested in pushing higher, and then we'll look to trade that up to this overall highs here, right? And then same thing, you have gold. So gold is a little bit different. You see this like this. So you see the daily time frame bullish markets. So this would be let's draw out the levels. We have our low to our high, to our higher low, basically to our higher high, to our higher low, to our higher high. So ideally, as long as price does not close below this area here, which is very, very far away, you'll see this structure more on the weekly time frame, right? As long as price does not close below here, we're expecting price to go up, right? Now, also, we have to also understand the correlation between pairs. If the dollar gets weak, we'll probably begin to see this one break upward as well. So on the 1 hour time frame, right? If you look at this, on the 1 hour time frame, we can also begin to wait for the same thing. Now, all the while, obviously, trading this looking for the counter trend trade, and we're selling. since price broke below here, since price made this structural low here, I stepped away from, because I was a buyer in this market, and then I stepped away from looking for buys and then began to focus on, temporary intermediate sales. And you can see how price has been delivering bearish ever since. So what I would like to see is for price to now begin to make 1 hour bullish structure. So essentially, I want to see price close above here. This is on gold. I want to see price close. If price makes its way up above here, then I'll begin to look for those buys aggressively to take price upwards. Okay, so that's so basically in one swoop we've touched on the this pairs EURUSD, GBPUSD, XAUUSD, yeah, and all of those fancy things. Now another pair to also I like the structure is USDJPY. So USDJPY has been bullish forever. Okay, not forever, but USDJPY has been bullish, very bullish. You can see on my weekly time frame liquidity targets. We had the daily time frame targets cleared out. I made it very good profit on this one. I'm looking for buys on the way up to this area, and I'm still looking for those buys. I understand that, yeah, price could. Now, if the dollar get weak, it may or may not affect it, right? Because the yen and the dollar kind of like they have their own thing, they do their own thing. Okay, so but it's not out of place. If the dollar gets very weak, we could see this drop down. But even if it does drop down, I will not try to sell it because I'm only interested in buying this thing. So from the standpoint of the overall structure of the market, we've taken out this high. Could we begin to make a new low, higher low to then go up, or does price want to creep up a little bit before doing that? Okay, so whichever the way, I'm only looking for buys on USDJPY, but only on I'll be looking for those on the smaller time frame. Straight I got in here, then work. So let's zoom out a little bit. Okay, so you could see we begin to shift bullish here. So let me just clear this. We began to shift bullish here. So price made a low, right? Then now we've just made a higher high. This is just the first higher high. So probably can expect maybe price drop down into here, and then maybe make a new higher high. And if that happens, I'll keep following this move until until the market decides to make something like this, and then I'll stay away from it and focus on other pairs. So yeah, that's a quick rundown for our weekly outlook. Keep in mind, pay attention to XAUUSD pairs because we could see them begin to push higher this week. But we'll see how that goes. Okay. Thank you very much for being here. If you're on the YouTube, make sure to please leave a like, subscribe, share the video to your friends or others, and let them, people who you think might benefit from content like this. And don't fail to leave a like, and if you have, just comments down below. I have something, I'm working on something to kind of engage more of my client, my clients, basically. Let me use the word, systems, Telegram channels and all. I'm working on something. Hopefully we would, it should be beneficial to you guys as well. Okay, so that's our session for today. Thank you very much for joining in. I'll see you in the next one. Until then, do have a beautiful day and a wonderful trading week.